Hey, what's up guys? It's Ezekiel here. So let me ask you, how many times have you jumped into a trade only to see the price pull back, shake you out before rocketing to your original direction? It's frustrating, right? And the problem? Most traders, they don't understand how to time their entries during a pullback. They enter too early and then they get stopped out, or they wait too long and then they miss the move completely. So today I'm going to change that, right? I'm going to show you how to trade pullbacks the right way so that you can catch the high probability setups. You can enter at the perfect moment and stop like second guessing yourself, right? So this is a masterclass on pullbacks, and this is the only video on pullback that you need to watch. Okay, first off, what is a pullback, right? A pullback is a temporary dip in price inside an existing trend. So it's a pause before the market continues in the same direction. Why is it important? I mean, let me give you an example, right? When the market is in an uptrend, you might consider entering a buy position here, but waiting before jumping in is better. Why? Because the market never moves in a straight line, right? It moves what? In waves, right? Forming what? Higher highs and higher lows with all these occasional pullbacks. So if you enter for a buy right here, right, what happens? There's a very high chance that a pullback or a trend reversal may happen. So a safer approach is to wait for price to retrace before entering your buy position. So aligning your entry with the natural flow of the trend is the key. Okay? The next question. How can you tell if the pullback will stop here or keep dropping further, right? I mean, I got you. So through research and obviously through my experiences, right? There are three key levels where pullbacks, they often come to a stop. First one, support and resistance level. Alright, so if the price pulls back to a previous support, resistance, right, which turned to support, or vice versa, whatever it is, right, it's just called support and resistance level, right? Chances are that the buyers or sellers, they will step in. So for example, the first level is your basic support and resistance, right? So looking to the left, you will notice what? The price has rejected this level multiple times, right? This tells us what? Hey, we can draw the resistance line here. You see, the price broke through the resistance and then what? It made a pullback. So see where it ends, right? Right at the resistance level, which has now turned into support. From here, price went up again. Now, once again, what happens? It finds support at the previous resistance level when the price pull back. So this shows us what? This shows us that pullbacks, they often end at these key levels. Okay? Second one, trend lines. The second level to look for is trend lines. You can draw a trend line that connects the swing highs, for example, in a downtrend, or the swing lows in an uptrend. So if price pulls back, right, and it touches the trend line, what you got to do, right? You watch for the bounce, right? So in this example, you can draw a trend line that connects all the what? The lower highs in this downtrend, right? And you will see that price, it consistently rejects the trend line during the pullbacks. So each time it pulls back to the trend line, the price reverses and goes lower. So this what? This helps us to confirm where the pullback ends. Alright, before we continue, I want you to check out FP Markets. So with over 20 years in the industry, FP Markets is a globally regulated broker. And that is the key. They offer like really fast execution, and more importantly, they have segregated client funds. So you can trade over 70 over currency pairs, 10,000 over stocks, indices, commodities, bonds, metals, and cryptos, which is all customized for your style. And they also have copy trading. So be it if you want to be a trading leader or follower, you got it covered. And they have 24/7 multilingual customer support. And that is like a big plus for a broker. And to top it up, they have some of the tightest spreads around. So check out FP Markets through the link below. Alright, come, let's get back to it. Moving averages. Strong trends, they often respect moving averages such as the 20 moving average, the 50 moving average, and the 200 moving average. If price pulls back to the moving average and it holds there, this is a potential entry point, right? This is a 50 period moving average, because price tends to react to it. When price pulls back to a moving average, it often finds support and then continues higher. Okay, but here's where it gets interesting. Sometimes it doesn't just touch one level. The lines, it can line up with multiple key zones. For example, a trend line with, say, a previous support, resistance, turn support area, or for example, another moving average. So when that happens, it's not random, okay? This is a high probability setup. A really strong support, right? More buyers are stepping in and a higher chance of price bouncing in your favor. For instance, right? Here, price pulls back to the moving average. But if you look to the left, you will notice there is a resistance area now acting as support. So this is what we call confluence, or area of confluence, right? So where multiple key levels they all align together: support and resistance level, trend lines, moving averages, right? So when the price it lands there, it's random anymore. This is where the market makes the decision, right? The buyers, they step in. So for example, some people, they understand trend lines. Some people, they understand support resistance level. Some people, they understand moving averages. So these are the moves that moves the market. Okay? When you're trading pullbacks, the first rule of the thumb is you got to stick with the trend. So if you're going to fight against the trend, it's like you're trying to swim against the current. You're going to get exhausted and then wipe out fast. So instead, go with the flow. If the current is coming here, you go with the current, right? Go with the current. Step 1, identify the trend on your time frame. If you're trading the daily time frame, right, then make sure that the daily trend is strong. If you're trading the 1 hour time frame, then look at the 1 hour time frame trend, right? So don't get distracted by the other time frame. Is the bigger picture. A trending market, they moves in waves. And what is your job? Your job is to catch the wave at the right moment. Wait for the pullback, enter it with momentum, and that's where you can ride it like a pro. If you're trading the 1 hour chart, it's your battlefield, right? So before you take a trade, you ask yourself, okay, is there a clear trend? If the price is chopping sideways, forget about trading pullbacks. No trend equals no momentum, equals no trade. So now, what if the 1 hour chart shows a strong uptrend or downtrend, right? So now you're in business. So that's when the pullbacks will become your best weapon, right? Letting you enter at all these prime levels. So now, for example, if the market isn't trending, when you trade pullback, it's a trap. don't trade pullback when the market is not trending, right? You cannot ride the momentum if there is no direction. So in a choppy sideways market, pullbacks, what? It becomes what? Fakeouts, right? So-called stop loss hunting, right? Frustration. No, don't do that, right? What can we do? Patient, right? Wait for a clear trend before you jump in. Here's the thing, not all trends are equal. If you do not know what type of trend you're trading into, in a way, you're flying blind. We're going to classify the trend into 3 trends, right? Strong trend, healthy trend, weak trend. First one, let's talk about the strong trend. Strong trend is what? Is when the price, it follows and it like hugging the 20 moving average. So what? This is where the market, it moves fast. It's barely pulling back. The 20 moving average is what? Is the average of the last 20 bars. So it's a moving average that sticks pretty closely to the price, right? Because it's only the average of the last 20 bars, not a lot more, just the last 20 bars. So this is where the price respects the 20 period moving average, right? So how to trade it, right? When you spot this kind of strong trend, right, you buy on a shallow dip to the 20 period moving average, or on breakout pullbacks, right? When it break out from the pullback, right? Because it's so shallow, right? Okay. Now, number 2, healthy trend. Healthy trend is when the price respects the 50 period moving average. So the healthy trend is like a more controlled uptrend, right? So price, it takes deeper pullbacks compared to the 20 period moving average, but it holds above the 50 period moving average. Alright, so now how do we trade it? You enter on pullbacks to the 50 period moving average, right? Or the previous resistance turn support level. Now, the third one, the weak trend. The weak trend is where price barely hangs on. So it can fall quite a bit, right? This is where price pulls back to the 200 moving average. So this trend is losing momentum, but is still intact, right? So there are deeper retracements, like deep retracements. So price struggle to make new high, right? So how to trade it? Hey, you got to be cautious here, right? You only buy at strong support areas, all right? Like the confluence that we have, right? Or after a clear reversal signal, all right? For example, with price action itself, plus confluence, plus volume, for example. Why does all this matter, right? The strength of the trend, it tells you where the area of value is. In a strong trend, you are buying all the shallow dips. In a healthy trend, you are waiting for the bigger pullbacks, right? In a weak trend, you get in at the extreme low or you stay out. So most traders they get wrecked because they keep using the same pullback strategy on every trend. You get what I mean? So this is where you are now trading with precision because you understand the trend that you are in. Pro tip, stop focusing or fixating on a single price level. So the markets are not perfect. So they will fake you out before making a real move, right? So instead, you got to think of it in zones. Right, the market moves in zones. It's a flexible area where price likely reacts at the area. All right. Most traders they overcomplicate this part, right? They enter too early, they exit too late, right? Or they panic at the worst possible moment, right? But here's the deal: entries and exits it should be simple. Your entry trigger. It's like what? It's like a green light, right? Once your conditions are met, the price is in the right zone, you need a clear signal to jump in. What are all these clear signals? It could be a bullish engulfing candle. It could be a trend line rejection with strong volume. It could be a pullback to the 20 period moving average with a pin bar confirmation, right? If there are no confirmation, no trade. It's as simple as that. exit when you are wrong. Right? You got to cut it fast, you move on. Right? So losing trades, it happens. It's part of the game, right? A smart trader, you exit early and protect your capital instead of keep on riding into the bad trade that is like heading into destruction, right? So here's how you know when it's time to cut the trade. So first off, your key level is broken, right? So for example, if price closes below the 20-period moving average in an uptrend, the momentum is shifting already, or your trade idea is now invalid. So if price doesn't respect your entry zone, so why stay in, right? Now you're hoping, you're not trading it, you're hoping, please go up, please go up, please go up. No. All right, so now, what is the mindset shift? So stop thinking about being right. Focus on staying in the game for the long run, right? So here's what I mean. Okay, in a healthy trend, the support should hold, right? So if price breaks below it, that is not a pullback. It's a warning sign. The market is shifting direction. Your trade is now losing its edge. So cut it fast. Don't wait for hope to kind of bail you out. Do you hold for more or secure your profits before the market turns? So now, here's how to exit like a pro without you overthinking it. Remember, let's go back to the 3 trends, right? In a strong trend, you ride the wave. So strong trend, right? Small pullbacks, strong momentum, stay in the trade, right? Adjust your stop loss just below the 20-period moving average and hold it until price closes below it. So this will keep you in the trend as long as the buyers are in control. And when you are trading in a strong trend, you can make a lot of money because the price can shoot like real fast. Alright? So now, number 2, the healthy trend. The healthy trend, that's where you take your profits in a smart way. The pullbacks are deeper here, right? So you got 2 choices, right? Number 1, you exit before the price hits the previous high so that you can lock in your profits, all right? Or number 2, you hold your trade longer by using the 50-period moving average. But hey, you got to get ready for all these big pullbacks, all right? But in this way, in a healthy trend, if the trend keeps going on, you can make a lot of money, all right? So these are the 2 ways. Now, next one, in a weak trend. In a weak trend, that's where you don't want to get greedy. The trend is losing steam, right? You don't try to I don't want to squeeze every last pip. No, right? You take your profit at the resistance level or the previous swing highs before the market flips against you, all right? So now, here's a simple rule, all right? Strong trends, they hold longer, right? You hold longer. Weak trends, get out faster, all right? So know when to let your winners run and when to cash out before the momentum dies. Trade pullbacks at key levels, right? To conclude, trade pullbacks at key levels. What are the key levels? Support and resistance levels, trend lines, moving averages. They are the prime areas for the price to reverse to. Next, follow the trend. Going against the momentum is a losing game, right? Identify what the 3 trends, the strong, the healthy, or the weak, to know when to enter, all right? The third one, look for confluence. So when multiple factors, they align, like the trend line is now aligning with the moving average, it's now aligning with the support level, right? The more, the merrier, right? The setups becomes a whole lot more reliable, right? Next, use clear entry triggers, right? For example, candlestick patterns, price rejections, breakouts, right? Confirmation on when to enter, right? All this will prevent entering prematurely, all right? Next, plan your exit in advance. So take profit based on the trend strength. So sometimes you have a fixed take profit, based on the previous highs, that kind of stuff. You're all based on trend strength. But if trend strength is good, sometimes you can have a trailing, like all the ways that we have talked about, right? So, and cut your losses when the price invalidates your setup, right? Don't hold and don't hope. No. Right? Final tip, right? Think of the market in zones. They are not single level, right? The market is not perfect. You can expect slight deviation, right? So that's where you want to focus on the areas where price is likely to react. So thank you so much for watching. If you enjoyed this video, please give it a thumbs up, right? It really helps to keep the channel growing. And if you are new here, don't forget to hit that subscribe button and turn on the notification bell so that you never miss an upload. So we also love to hear from you, right? Drop a comment below and let us know what you think or what you like to see next. I mean, your support truly means the world to us. It keeps us motivated to bring you awesome content every week. And if you're keen to learn more, I've created a free 5-part comprehensive training where I show you exactly how I trade using my lifestyle method. Link in the description below.